All right, we are live with our second webinar regarding how to make a decision if you want to build or buy a ready-made solution for your Web3 onboarding needs. Today, um, I'm presenting together with Ren, so I will give a short introduction first about myself. I'm Konstantin. I'm one of the co-founders and currently Chief Business Development Officer of Paybis. I'm 11 years with the company. We are 11 years together in crypto. A brief overview about the company. We're like getting close to 200 people. We have a lot of retail clients. We did quite significant volumes this year already, and we're still growing. In terms of the transactional volume, in terms of number of partners, I think we have doubled this year. So we have quite a good traction with our products, and we're going to talk about one of them today, and give some insights and some details. So Ren, please be my guest.
Hi guys, good to be here, Konstantin, and thank you for the invitation. I'm Ran Cohen, the CEO and co-founder of BridgerPay. We are a payment orchestration platform founded in 2019. Today serving thousands of businesses around the world for many different verticals, connected to above 1,000 different payment providers and methods under the umbrella of BridgerPay, processing above $10 billion a month and growing very fast, helping businesses today orchestrating payments, reducing declines, and rescuing soft declines. I can tell you that just this year, 2025, we rescued above $500 million, which is a crazy
It's quite
number.
impressive.
Yeah.
Thank you, Ren, for joining us as well, helping me to run the show. And I just wanted to say that we have been working in partners for like 7+ years, I think, already. I mean, the relationship has been amazing. We have achieved a lot, and we will talk more about what we have achieved together with BridgerPay, how we use them, and what other capabilities they have. So you guys can learn from us, you can learn from BridgerPay, and you can, in the end of this webinar, have a better understanding and make a proper decision. So a little bit on the agenda, what we're going to talk about. So we're going to talk about the onboarding process itself, like what challenges are there for onboarding people to Web3. I mean, this is whole webinar is targeting, of course, or is about our main product, crypto on-ramp. But I think the same things will be applicable for any e-commerce business which deals with Web2 customers and cares, I mean, with regular customers, right? And cares about onboarding, conversion, and sales funnels. So we're going to talk about like issues during onboarding. We're going to explain a little bit what on-ramp is. We're going to talk about 3 solutions which help to convert better inside the sales funnel. And then we're going to cover and talk about like how to make a decision whether you build the software and everything in-house or you get a partner like us or BridgerPay and outsource some of the features to a partner. Let's continue. Onboarding. Like in every business, especially in ours, it's very important to make sure that you convert the customer intent to purchase something into the actual sale, regardless of what you're selling. In our case, we are in the business of selling crypto to retail customers. And in this way, we help Web2 people to get onboarded into Web3, get their first crypto, become crypto native, explore the industry because it's kind of, it's huge, it's amazing. There is a lot of things to learn. But typically, how it happens and we have seen it ourselves in many different places, right? When you come to a specific place, you want to buy something, if it's financial services, right? For example, you want to buy crypto, you will start, typically the journey is very long. You have a lot of steps. You have to find what you want to buy. You have to figure out how you want to pay. You have to kind of register on the website, confirm your email, or create your password. Then you have to proceed with entering payment information, card details, your personal information, address, and so on and so on, then you would proceed to the purchase. If it is, let's say, a high volume investment or purchase of cryptocurrency, you would have to go through verification, source of funds. I mean, quite a complex process, right? So and we all know how it is easy these days in e-commerce. For example, if you want to buy shoes online, and there are plenty of places where you can pick your product, select quick checkout with the Apple Pay, like express checkout. There will be, the website will get all the information they need from that express checkout function or feature, and they will just ship your product. That's it. In a couple of clicks, you can get your stuff. So we try to approach the same problem in the same way and try to make it as simple as possible for customers to get their first step into crypto world with similar approach, right? Where you see what you want to get, you basically instantly check out with Apple Pay in this case, which is demonstrated on the slide, and voila, right? You can basically, it's the fastest way to get your first crypto in like literally in 30 seconds. Ren, do you want to add something here?
Yeah, sure. So you show it very nicely, and also the conversion differences, right, between the two methods. But it's important to say you don't get to this 70% so easily. It requires infrastructure that connects between the world of processing, the world of crypto, the world of KYC, and you put them all together in the same language that allows you to show what you show here on the right side, to have a unified screen, to keep the user with minimum clicks and details to add. That's a lot of work to get there. Goes without saying, multi-layer token, agnostic 3D, so many things that, or so many technologies that are being used just to move between the two phases. But although it looks simple, there is a lot of work behind there that Paybis has done throughout the years.
And that's what we're going to talk about today more in details in the next slides. And this is just a good example of why it is important to, in any business, to make sure that the customer gets or spends the least time on any step, right? Because the more let's say, the more effort there is for the person to enter the detail, maybe he's on the go, right? He's on the mobile, maybe he's rushing, or he doesn't have enough time, and or sometimes they would see a big form. Okay, I have to fill in 10 fields. Oh my God, this is so complex, and he will just drop off. So the more complexity there is in your sales funnel, the more drop-offs you will have. So we, of course, always try to build as the interface as simple as possible to get pre-filled data as much as possible, save the previously recorded data. So even if the first time the customer is experiencing this complex process, the next time it will be easier. For example, in the screenshot we demonstrate that, okay, we saved the card that he used last time, and that will kind of make him expedite the next purchase. Then let's talk about other stuff which prevents successful onboarding, or where people drop off. Just to kind of sharing the knowledge from all our 11 years of expertise. Of course, these days in crypto, MiCA is in around the corner in many countries, already in place in some countries. And of course, the regulations are there, which requires companies like us to do KYC. And we all understand that KYC is sometimes really kind of a blocker, right? Or maybe you can feel as a user this is unnecessary, but we all need to remember that regulations actually help with adoption, right? All the new technology which goes out there at some point of time, like for example Uber, Airbnb, crypto is the same. It first innovates, it's very fast in terms of innovation. People start adopting it, but then in order to ensure that the service is continued to be delivered according to your expectations, that consumer rights are protected, that you as a person who is consuming the service is protected, and you will not fall a victim of scam some issues, or maybe an honest merchant, then the regulations kick in. The same stuff with crypto, right? So all these MiCA regulations in place, which require KYC, of course, there are some like anti-money laundering objectives in place, but the main important thing is to protect the rights of the consumers who are using such a service like us, which gives or let's say improves the trust into the technology and improves the adoption. Every year we have more and more people getting onboarded into Web3, because more and more people understand that, okay, crypto is not a scam, it's not some shady fake money, it's actually becoming alternative financial system, a good maybe alternative investment, and people start trusting it more. And the more players in the space who are trustworthy with good reputation, the more people will start using and getting into it. So of course KYC is a good is a mandatory thing to have, but what we are trying to do, for example, in our case, we're also trying to optimize the flow. Thanks God, we have a good partner, SumSub, which helps us to do so-called shared KYC. So if, for example, a customer goes to a centralized exchange, he has done his verification, his KYC, or let's say a mobile wallet where you have your debit credit card, for example, if you have verified and you have done your KYC, and then if, for example, that partner integrated our solution to give the customer an option to buy crypto inside that app, then we solve the problem of reducing the double KYC need, right? So this is again focus on good user experience, less drop-offs, and why do you need to do it twice if you have already done it, right? This is kind of amazing stuff. Then the next important thing is the anti-fraud, right? Whenever you deal with payments, and all of you, I guess, know that you always end up solving the same problem again and again, right? There are so many fraudsters there, scammers there. With the AI, it's getting even more complicated, which are basically just abusing the system and trying to launder money, scam people, and so on. So you also need to put in place a good anti-fraud solution, because with the anti-fraud solution there is always a balance, right? You can make it very strict, and then you will have very low approval rates, a lot of false positives, and normal customers will be affected, right? And you will have low approval rates. People will not like your service, they will go away. If you make it very light, then you might end up in getting a lot of financial impact, right? So there is always a good balance between like acceptance rates and fraud rates, and you don't want the kind of legit customers to get affected. And with all the technology in place, for example, we also use SumSub and Ensure AI. With all the even AI technology in place, there are always false positives, right? And you have to balance always between these two. The next thing, which typically also affects kind of conversion, are especially in card payments, the issuing banks and acquirers. What we see, and this is kind of one of the reasons where we use BridgerPay, and we're going to talk more about the next slides, is how to make sure that the person paying from any part of the world will be able to pay with his specific card, because we all know that, for example, our company is in Europe, we have acquiring bank in Europe, but if somebody is trying to pay from Argentina, for example, or Latin America or Asia, maybe their bank will not trust the local bank in Europe, because they think, okay, customer is making cross-border transaction, maybe it's suspicious, right? And they might flag this transaction in their internal system as a fraud and not let it through. So it is always kind of important to make sure that you find the local payment channels worldwide and in the regions that you are targeting, to make sure that the approval rates are better, success rates are better, and then you also save the failed transactions. And we're going to talk more about it. And then the last thing, but not least, is or are the local payment methods, right? We all know that for example, Visa, MasterCard is something that is very popular almost in all countries, right? But you would be surprised that not in all countries. So, for example, when I was doing my research yesterday about this, I found interesting statistics, like that even in the United States, only 60% of people are using cards. In Europe, it's even less, right? A lot of people are using local payment methods, like iDeal in Netherlands, Blik in Poland. If you go to Asia, it's even more, right? So, Visa MasterCard schemes are kind of widely used globally, but there are more and more alternative payment methods worldwide which are being adopted, which sometimes are cheaper, faster, for many different reasons. Some people cannot get banked, for example. So you have to think about that as well. Ren, do you want to add something here as well?
Yeah, I'll add just a few things. The trade-off can be happening for sure on the anti-fraud and KYC part. On the payments, it's just not there. You just need to be fully optimized all the time and make sure you don't miss any transaction. We see a lot of declines and a lot of conversion failures coming from 3D sessions that are happening when you're using the PSP 3D. So many of the clients and many of the platform we that come to us comes in a status where they are connected directly to payment providers, connected directly to payment acquiring services, and each time they have a decline, they might try it again, and the user need to re-enter his credit card and go through another 3D, and this is huge friction. So the agnostic 3D obviously is a solution that solves all these onboarding breaks and failures in conversion and help you a lot. Like you said, in terms of false positive declines, I can tell you in the industry of crypto, it's around, we are able to rescue every fifth decline. That's a lot. In the end of the day, behind every exchange and every acquiring services, there is a bank, an acquiring bank that has his own risk appetite, or a gateway or PSP that has his own risk appetite, and those are working hard to eliminate any risk for those acquirers. So if any card that doesn't fit their logic comes in, it will be declined, and this card can easily pass in other payment providers. So the ability to retry them behind the scene in milliseconds when the user is completely agnostic, that's, I think, is a big benefit that solves a lot of the pains that you mentioned here regarding payments.
Yeah, we have a dedicated slides about that. Stay tuned. We're gonna talk about it more.
Yeah.
Let's continue. I wanted to kind of also, use the opportunity and educate people to explain like what an fiat on-ramp actually is, right? Because it's like you have seen like three screenshots, right? So couple of clicks, you get a crypto. So to explain what is inside that small, let's say, application that you can install into your project. And I see here similarities. I mean, of course, it's like tip of the iceberg. You see something on the top. There is a lot of on the bottom. But I also see kind of analogies in motorsport, which I'm a big fan of. And for example, the good analogy would be with Formula One, right? Every weekend you see two cars racing, right? But there is like 1,000 people and in the factory, in the back, and the whole team to make sure that two guys can drive the car every 2 weeks. So it looks very easy, right? Just step in the car, go for a race, and so on. But in the end, you have like a huge amount of people, a lot of technology, a lot of processes and resources in place to make it happen. The same is here, right? And I will just explain what things are included in this product when you are getting similar product from us or from somebody else. So first of all, payment orchestration that we already started talking a lot, right? Instead of like integrating tons of different payment methods and figuring out, establishing a relationship with acquirers, banks, payment providers, and so on, you get everything like out of the box, or not everything, but quite a lot. Compliance wise, right? There again, you need to kind of figure out how to navigate in terms of regulation in every jurisdiction. Like US, you have one regulation. Europe now we have MiCA. Then there is like Asia, Latin America, and so on and so on. Travel rules are getting into place. Then you have like PCI DSS, which is also a regulation that you have to obey, and so on. AML things in different countries. Again, you don't have to think about it. You just get it out of the box, and the team behind this process on our side or any other company, they actually have to work it out because they have the license. They figure out the processes, and it's a big part of the game, right? Especially with payments these days. We mentioned fraud and chargebacks. Again, this is kind of included, right? If you take this service, integrate it to your platform, you don't have to think about that. we would take care of that, or any on-ramp provider would take care of that, and they will take even the liability. So you have peace of mind, and you don't have to worry that if there is a chargeback, then you're not financially impacted at all. Then you would have to, of course, don't worry about the forex, foreign exchange, treasury management, cash flows and everything, because you're not putting your capital into work. We would use our own capital to process the payments, deliver the crypto instantly to the customer, and then, as you might know, that you not always get, let's say, settlements from your payment providers instantly. Sometimes it can take up to a week. So we use our own kind of capital to make sure that the service is non-stop and 24/7. Of course, cryptocurrencies, like you need to find the place where you can get the liquidity in terms of crypto, at what rates. It also has to be stable. There should be business continuity in place. You have to make sure that when there are price dips, you can manage the volatility and not have a financial impact on that. Lots of tips and tricks there. And then, of course, you have to do like a lot of settlements, reconciliations to your partners, tech support, customer support, and built in the technology stack to make sure that you have very good uptime, high availability, business continuity, and so on. So when you kind of see a small widget that typically you can integrate into your platform, it means that there is a lot of technology behind, a lot of resources, a lot of processes, a lot of people behind this, just to make a simple purchase, let's say, of Solana into your Phantom wallet working in like 60 seconds. Just a quick kind of visuals, right? How the flow looks like. So typically you would see interface like this, which can be white labeled to your design, to your brand. Put your colors could be put in place. Your logo types can be put in place, and so on and so on. So it can become a natural part of your own project, of your own application. And then it's up to the clients to decide, or our partners to decide. Some of them want to make it as native as possible. Some of them want to keep our branding to make sure that the customers understand that when they buy crypto, they deal with us. And then, for example, when they use a crypto wallet, they deal with the developers of the wallet. And then, typically this is like the first screen the customer would see. The next one we demonstrate here that they would start the purchase with Apple Pay. Again, we would not ask you for your email, your first name, address. We will get everything from Apple Pay. We will use that information to register you as a customer. We will use that information to do our basic AML checks that we are obliged. We are one of the few providers who can do crypto or sell crypto without KYC up to a certain limit, like $1,000 per person per year. And knowing that the first transaction typically is around $100-$150, depending on the region, your first step into Web3 could be very simple, because in most cases people are kind of spending around 100 euros to make their first purchase, just to see how it works, experience it, and your first experience defines the future journey. The easier it is, the more likely you will come back, the more likely you will stick. And these days, on-ramp is also used to increase the loyalty and the churn in your project. Because if you remember the industry, like 5 years ago, there was tons of crypto wallets out there suddenly appearing. A lot of them non-custodial, some of them custodian. And there was a competition for the users, right? Some people like MetaMask, some people like Exodus, and so on and so on. And then, of course, to keep the people, and we have our own wallet, so we know that. And in order to keep the people loyal to your product, you need to give them the basic options, right? And the basic need for all the crypto users is to get more crypto, right? Because they want to buy new stuff, they want to swap, they want to invest. If you just give them a crypto wallet without that possibility, they will go elsewhere, right? They will go to another project, they will find the place where to buy it, and they will stick there because they have a crypto wallet functionality as well. Same is with businesses, right? If you, for example, have more and more clients from who are electronic money institutions, so basically neobanks, banking partners, B2B banking providers, right? And then all these banks and financial institutions see now that a lot of their customers are getting into crypto because they want to transact using stable coins, right? They want to accept payments, they want to pay, and so on. So these companies just see the money flow going from their banking, their IBANs to exchanges like us or like Kraken or Binance, but they're not monetizing that traffic, right? So what we are offering them is similar kind of product where they can start monetizing their existing customers. and giving them the same function that they use elsewhere, making sure that they are keeping, the customers are loyal and they will stay with your product. So this kind of, onboarding people to Web3 is not only about retail, it's also about helping businesses to get into it. Okay, Ren, now we're gonna talk more about what you guys are excelling in, right? Cascading, and I will tell the business need, and then you can explain the technical stuff. So the business need, as we mentioned, is for us to make sure that we get a good success rate. So on the back end of our kind of product, we have relationship with several acquirers, like top acquirers in the space, like Revolut, WorldPay, check out the biggest guys. But again, even one biggest acquirer cannot give you and guarantee you perfect success rates in every country. That's why the trick is to make sure that if the customer is trying to pay, it doesn't work with Stripe, we'll try WorldPay and so on. And then Ren, you can maybe explain more how it actually happens behind the curtains.
Okay, so we spoke in the beginning about the need of an infrastructure, a unified infrastructure that speaks in the same language, basically translating each payment provider and acquirer around the world that has its own language, its own decline reasons, its own code, of course, and unifying it into a single layer, a single place. So a business or exchange like Paybis or others can come in to Bridger, connect from the 1,000 different payment providers you have in Bridger, connect their own payment accounts behind Bridger to basically connect the audience, Stripe, WorldPay, you can see here in the image. And that's their own account, right? Where settlements are coming directly from the payment provider directly to the exchange. Orchestration is not a part of the money flow. So everything that is related to the actual funds, it's between the payment providers and the business here, which is Paybis in that case. And Bridger facilitate and orchestrate the transaction and retrying it according to Paybis logic. So Paybis might have multiple different logics according to different countries and different card brands and card schemes and card issuer countries, etc., etc., etc. And they are simply connecting them by a single, by a drag and drop within Bridger, allowing them to set a flow of a transaction. And as you said before, we monitor those responses back, and every soft decline, a decline that we know in Bridger that could be approved in any, or that we saw in our data that this transaction can be approved in another payment provider, we categorize it as a soft decline and we retry it behind the scene. So the user that is actually performing the action has no idea about what is happening here. He has no understanding that the transaction is being redirected or moved or retried between different providers. For him, the transaction is still in process, while for you, the business, we are trying different acquirers according to your sequence, and until we reach the one that is accepting the transaction. There is no limit of acquirers that you can put in a route. We have clients with 10 and 11 payment providers on a route, and we still see transaction passed on the 8 and 9. So like you said, there is no 100% for any payment provider, and that's what our clients do. Like I said, we are rescuing, and we've rescued just in 25 around $500 million from with Bridger Retry. And for clients in the crypto space, again, it's about every fifth decline is rescuable.
Yeah, that's true. And maybe additional thing which I want to mention, why we also like BridgerPay and why we see a value in us using it is we save a lot of effort and, let's say, IT resources on integrating all of these providers. Every one of them have their own API. And then you have to not just integrate it once, you have to maintain it. They change something, you have to update it, right?
They
You have
don't
to make
stop
sure
it. Yeah,
it's never-ending story, right?
never ending story.
And somebody have to do it, right? Either you spend your own resources, and it's always happened the same with development of anything, any
And it's not
software. You
just
think
them.
like,
Sometimes it's the schemes that, every year there is a
yeah,
new
yeah.
idea that you have to now implement on across all your payment providers. That's a challenge. So
That's true. That's true. And it's always like, it's not about just building the software yourself, right? It's about then continuing to maintain it. And it sometimes you can end up spending more than 50% of your development resources
much.
in just maintaining your existing systems instead of developing new stuff. And this is where it helps us a lot to focus on what we do best and on our main core business. And Ren with his team to manage all these integrations, add new integration. And then, for example, if we have a new payment provider that we want, then we come back to Run and say, hey, we need a new payment provider, and we make it happen.
Yeah.
Okay, let's continue. The next thing is fallbacks. This is another thing which is a bit different to kind of soft declines which Ren talked about. So this is something that we have built ourselves on our side. And the logic is very simple. For example, a person, let's say from Brazil, is trying to make a purchase with his Visa or MasterCard. For any reason, the purchase didn't go through, even through all our acquirers, through cascading, regardless of the reason. What we're gonna do in this case, we understand, okay, the person is from Brazil. We have a local APM, like Pix, for example, a regional payment method that people in Brazil use. And if the card transaction failed, we will tell him, look, we will try to redirect you to alternative payment method. Maybe it will work, right? So we have a logic on our side where we map all the customers from all the different regions against let's say the local payment methods that we support, and we constantly strive to kind of increase the number of alternative payment methods that we can offer to the customers. As you know, there are tons of different payment providers in the world. Not all of them yet are crypto friendly, which is sometimes a challenge, but we're working on that. I mean, it's getting better every year with more regulations. It's getting better. The good example is PayPal. Like, I remember like 5 years ago, PayPal was like against crypto. Every person who was trying to buy or sell crypto with PayPal on eBay or on some marketplaces, they got their accounts locked, banned, and so on. What happens now? These days, PayPal is everywhere. We support PayPal. People can buy crypto with PayPal from us. PayPal have released their own stablecoin. I mean, they went full crypto because, again, of regulations, right? Because they're a big public company. They have a lot of regulations in all the countries. So it took time for them to figure this out. And now it's kind of going mainstream. So I'm pretty sure this will happen with a lot of smaller payment providers worldwide. And based on our statistics, what we see, we are able to save around 8% of failed card transactions, which is quite significant in terms of additional revenue that we can generate. Let's continue. Let's talk about APM since we already touched base on them. This is what I mentioned, like some statistics about card coverage worldwide, right? It's not as widely used as you might have expected. In many areas, regions, card even is not your main payment method. Like they have a lot of local payment methods, Asia, Africa, Latin America, and so on. So again, we are coming to the same story, right? If we have to integrate every payment provider in every country, I mean, we would just spend time on integrating everything, right? And this is the beauty of BridgerPay, right? Since BridgerPay not only serves, high-risk merchants like us, like with crypto industry, but they serve more traditional e-commerce. You guys, I don't know how much you have, like more than 1,000 integrations. This is what I saw on the website.
Yeah. Yeah, it's around 5 a week that
Oh
is
my
being
God,
added.
it's a factory.
It's a factory.
And I assume that different industries have demand in different payment methods. I think crypto is
Yeah,
only the one which is limited to APMs, but traditional e-commerce, they can get access to everything.
it's not just e-commerce. You have travel and hospitality, and those, for example, you think travel is in a low risk, but no, it's a high risk industry. There's a lot of refunds and cancellations there. So PSPs and acquirers are also looking at them, in a risk. Airlines, the same. But I think the fact that we are working with so many verticals around the world gives us the understanding of really what's the usage. So when you come to us and you tell us, guys, we want to operate in, I don't know, Thailand, or we can tell you exactly which payment methods are actually working there. So you don't waste time just on integrating, 10 methods and then, work for nothing. The idea is to connect you with what works. You just show here, for example, GrabPay. If you don't have Grab in your checkout, it's almost like you're not existing in the area. It's things people expect to see. That's where you get people to leave your checkout without doing anything. Once you're not showing them the methods they want. If you don't have Revolut, and I'm with Revolut, and everything is with Revolut, and it's so easy to use, that button, then yes, you're going to miss a little bit, because I might have balance in my Revolut that I don't want now to spend from my bank credit card.
Yeah, and that, regardless of the business you're in, if you're targeting, let's say, different regions, different jurisdictions, I mean, APMs is a must-have. And again, coming back, like what is the split between us and BridgerPay in this case? That from our side, in our line of business, our main focus is to kind of get more APM support. So we are talking constantly to different PSPs, APM providers to get more payment methods. And again, for us, it's a challenge because not all the payment methods are yet ready to work with the crypto exchange companies. Somewhere they require local licenses, somewhere they're still not there because their internal kind of ML and compliance departments still don't understand how to treat it. But every year we have more and more local payment methods becoming available, which is great. And then our job is kind of find and get access to the specific payment method. And then, for example, when we have onboarded with specific PSP or APM provider or payment institution, then it's just a matter of going back to BridgerPay and saying, guys, okay, we have access to that, let's say, PayPal account. This is our corporate account, Skrill, whatever. We go ourselves, we configure it because there is already existing integration. We test it. If there are some issues, we have always a team there to support us, and then it just works. So from your end side, I mean, you can maybe also talk a little bit about other industry use cases, because, for example, these things I think are more applicable for other industries where you provide also the hosted payment page. Because in our case, we integrate you through API, but I know that you also do hosted payment pages for like travel.
There is different businesses and the platforms, and they choose different methods of integrating. But I think the people and the audience we speak to here right now is a type of audience that is supposed to either build or buy or rent a top-notch technology, I guess, to get to a very high-end experience in payments. So you would want to go through all that way, build your own checkout, run your own PCI. That's like a really stretch. Paybis is doing it, but I haven't seen anyone else went through all that way to get to the point that you really control every aspect of your payments. That's not something easy. There is levels and layers below that or before that where you can use the services ready-made in a box that saves you years of time and millions of dollars in production.
Yeah. Let's continue. So we have a few more slides left. We're almost in the end. So the last thing I want to talk about, this is specifically targeting the people who are looking into integrating an on-ramp provider or looking into building themselves a capability to accept payments. So for example, I want to talk here about the use case which we call one-click Apple Pay checkout, which we showed in the beginning, which we showed in our screenshots, but I just want to explain how it actually works. A bit more into details. So we would skip, as mentioned before, asking customer for everything, right? We would just ask the customer to press the Apple Pay button, then confirm it on the device, and then just sit back and relax. the technology-wise, what happens here as well is also quite amazing, right? We get the encrypted information about the user through Apple Pay, especially about his card. So we never actually see the actual card number. They even mask it, right? So we get this tokenized data, we pass it to the BridgerPay. Then on the BridgerPay side, they kind of during the cascading, that information is then sent to the acquirers, sent to the banks, and there is some like the whole magic behind all the technology, how it works. And I mean, you wouldn't really want to spend time reinventing the wheel. You would want to find some partner who can make sure that card payments would work, Apple Pay, Google Pay would work. I mean, if you think that Apple Pay and Google Pay comes as a default with every integration of a card payment solution, I would make you not so happy, and I will tell you that it's not. You have to put a lot of effort to make sure that Apple Pay works, that Google Pay works. A lot of technology you need to put in place. Again, BridgerPay, the benefit is that it's unified interface for us, right? We at some point in time we had our direct integration for Apple Pay, but then we fully migrated to BridgerPay, and now we also do cascading. Even if you pay with Apple Pay, we have cascading in place. If it doesn't work with this bank, it doesn't work with that acquiring bank, it will maybe work on the fifth acquirer in our cascading scheme. Again, improving the success rate, improving the checkout process. What else important here? I mentioned basically from our side that this is kind of the fastest way forward. From the BridgerPay side, again, they put all the kind of technology in place to make sure that for us it's as seamless as possible, and for the user it's as seamless as possible. And anything you want to add here about like Apple Pay, Google Pay?
Yeah, look, retrying credit cards is something that we've explained, but retrying between Apple Pay is a real innovation. We are the only one that is doing it in the world, and this is really, like you said, it's a big. A lot of technology is relying behind that. You could do it only when you have a direct partnership with Apple Pay and Google. That's the only way to do it. And then. I think we were also surprised, that you would think Apple Pay, it's a very frictionless experience, things should pass. But we still see 3-4% of retry value there, which is amazing. And that's a lot of money in the end of the day, especially in Paybis volumes.
Yeah, and you have established a good relationship, right? Direct relationship with Apple, Google Pay, which is kind of amazing as well. All right, let's get to the close part. So let's try to summarize. Here we want to summarize to make it simple for you to figure out and make your decision when you want to kind of build stuff in-house. And I want to gonna explain some of the use cases in the industry which decide to build stuff, and some use cases which decide to kind of get a ready-made solution. So good examples are, for example, Kraken, Binance, Bybit, like the biggest names in the industry in terms of centralized exchanges. For example, Binance and Bybit, when they started, quite some time ago, they used partners like us, right? Because it was not their core business. Funds deposit to the exchanges, it's not part of their core business. They earn money on trading fees, but they still wanted to give the customers an easy way to deposit funds, right? Because this is kind of the start of the journey and onboarding to their projects. At some point of time, when they grew to the kind of huge size where they are now, they decided that, okay, now we have the knowledge, now we have the capacity, now we have the resources, and they decided to build everything in-house, right? But there are only a handful of companies out there on the market who are big enough, who can afford such a big project. So they spent like a year developing this internally. They spend a lot of resources developing this internally, but there were specific reasons, like they wanted to do it, they could do it, and they could afford to do it in terms of financial resources. So this is kind of the kind of place where you have to think, if you're building a product, regardless if it's a retail oriented product or if it's a B2B, it's a product for other businesses, it's the same logic, right? You have to figure out Do you want to kind of have 100% control in-house? Do you have enough resources in-house, and not only financial resources, right, but also the right people in place with the right expertise who can build that stuff, who will know how to build it, who can understand all the details and complexities, and make sure that they can maintain it going forward. And it's everything. It's not just IT resources, right? It's your internal company. All the departments will have to be involved: accounting, compliance, legal, operations, customer support, and it's a lot of effort, right? There are still use cases where people and companies decide to build it. For example, when we estimated internally that, and we validated that estimation with our some of our partners, that it makes sense for a retail oriented crypto project, crypto wallet or exchange, to start building things in-house when they have like more than 30 million of fiat deposits per month or purchases per month. Then commercially it starts to make sense to keep things in-house, because of course, I mean, we have to kind of be profitable. We have our own margins. Everybody have their own margins in the game. So these guys can make it a little bit cheaper for their customers to get into crypto, but they incur the costs. From B2B perspective, the volumes are even bigger because the margins are much lower. If getting crypto liquidity on exchanges and retail with a card, you would pay around 4 or 5%. If you're a business and you want to get into stable coins and you go to exchange, you will pay like 0.2, 0.3% depending on the exchange. So the margins are much different, the volumes are much different, but this is kind of the ballpark. And then of course, when you decide that, okay, I want to offer my users an option to get into crypto, help them on board, especially if you're building a Web3 or DeFi project, you want them to get on board as fast as possible. And then you have a choice, right? You can get everything from us, for example. Then it will be a full package, right? Payments, compliance, licensing, and so on. If, for example, you have a business where you have already your licensing in place, you have your Mika, and you're planning to get go for it, you have your some of the, let's say, things which are included in our ramp already in your company, and then, for example, the only missing part for you is to integrate the payment methods, integrate liquidity, and so on, then for you it would make sense to go and search for a payment orchestrator like BridgerPay, for example. And there is a good use case on the market. I recently spoke to one of the European centralized exchanges who are very focused on specific countries, and they have been building everything in-house since day one, right? Since they started like 2 years ago, they built everything in-house. And when I spoke to them in scope of like offering them our product, they told, yeah, we have everything in-house, like card payments and everything. Yeah, maybe it's not working the same way as on your side, but it is good enough. And then they also told me, yeah, we are integrating local payment methods in Europe. And then when I asked them, like, how do you do it? Like, do you integrate everything yourself, or you're using some payment gateway? They like never even heard about BridgerPay. They never even heard about other solutions that you can use actually. So there's still a lot of that's why we're doing this kind of educational webinar, to educate people, so you can share it with your friends, with your colleagues, with your friends in other companies who maybe are having the same challenges now. They are on the bridge of deciding how to realize their projects. They can learn about us, about BridgerPay, and find the right tool for their needs. Ren, do you want to
questions, Konstantins? Do you want to answer?
Yeah, we will now go through the questions. There is maybe the final slide with some kind of questions that you ask yourself, but I think I have I have spoken through them already. I will keep them here on the slide, and let's go into the chat and answer some of the questions. So I see 2 questions here. The first one: please name main 3 benefits of an on-off ramp service provision. I believe the question is about the benefits of getting on-ramp provider into your project rather than building everything yourself. I think for me, from my perspective, the benefit number 1 is time to market, right? Because integrating a partner like us or somebody else, it takes, the development effort takes from a week to 2 weeks, depending how deep you want to integrate into your UI UX. If you want just a button, like buy crypto or get into stable coins and redirect to us, it's like a matter of couple of hours. If you want to build it into your system, then it could take a week or two to do it. All the compliance, onboarding, blah, 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 can be done in parallel. So literally you can get to the market in a couple of weeks' time, right? The second, of course, benefit is that you can test the market. So go to market fast with a like little number of resources and understand if your product actually fits the market and the auditor that you're chasing. It will give you a quick way to validate your business ideas, see that they work, focus on getting more users, on growing your product, on marketing, and let us, for example, handle the rest. And the benefit, maybe number three, is expertise, right? You get the expertise, like 11 years from us, almost 10 years from Ren and his team, like expertise in payments. Because as you already probably learned, there are so many tips and tricks you need to know. You will learn them by doing, but it will take you a couple of years, probably, right? If you want to get the expertise fast, go for it.
I think I will add one, maybe also the cost of building, cost of regulation, cost of maintaining. We are talking about many millions that you should invest in your go-to market. And like you said, when you reach a certain volume, even then things can be done in phases. Not everything has to be in one go. And for you to scale up your capabilities together with your volume.
All right. The next question is actually very similar, right? Because what we see now on the market, and we have already several use cases like that, where VASPs who obtained like a VASP registration, which is not really a license, it's more like a VASP virtualized service provider registration in a specific country, and they start offering their services. I mean, this is quite easy, right? When you now have to upgrade to CASP/MiCA, the regulation are much more heavier. They're much more stricter. You can compare it probably to closer to banking regulations because, for example, we have been going through audits from our existing jurisdiction last year, and also in the United States. And now, for example, as any VASP, we are in process of getting our MiCA, and we understand that the level of expectations is completely different. It's like 10 times more you are expected to deliver as a company in terms of processes, procedures, compliance, checks. So basically, again, this MiCA stuff is good because it will filter out the companies who cannot afford to do it or who cannot deliver to according to the expectations, and these are like quality, a certain quality level. And the market will consolidate and only the strongest guys will survive. So what we see on the market is happening now, that companies like small VASPs who has been trying to do what we do themselves, and they're getting traction, they're getting their customers, but they realize that they are not big enough yet to be able to kind of do all the compliance themselves. And they're not profitable enough to support the cost of compliance because, like, for example, now we have like 10 people in compliance team. They decided to migrate to our solution, to our white label solution. So we take care about payments, compliance, and everything. And for them, the biggest point was the compliance stuff. And they just focus on growing their product, right? So they're focusing on adding new features, on working with their existing customers, on growing their customer base, on marketing, developing new features. So it allows them to continue their business running without, let's say, thinking about the license, because I mean it's fully outsourced to us. So this is kind of the answer here. All right, it's time to wrap it up. I think we even spent more time than I expected. Thank you, Ren, for joining. If you guys have any questions, you'll know where to find us, Paybis and BridgerPay. Contact our sales guys, contact the support that you have on the web. I mean, some of you know me personally. You're kind of feel free to reach me out as well. Happy to be here, happy to educate, and stay tuned for our next webinar in December already, where we also have a webinar with one of our partners who are using our on-ramp, but they have designed a unique product and they're launching it in December. There is nothing else like this on the market, and it will be quite interesting because we're gonna talk about it. But maybe one of the first who are gonna talk about it with them and present it to the market.
Great.
Thank you everybody for your time. Cheers.
Bye-bye.